I know you talked a little bit about fixed income, so I want to drill down on that. The Fed's meeting today.
Yes.
And of course, everyone is wondering if interest rates are going to be cut. Could they possibly go up? So I wanted to get your forecast on potentially what's going on with interest rates this year. And is Chairman Powell going to stick around past his May deadline?
So today's meeting was very interesting. And we'll know about the results of the meeting when you see this video. But my expectation are, number one, the Fed does not cut rates this year. It does not cut rates today. There's a 98% chance the Fed keeps rates as is, and the Fed is not going to cut rates. And I think this makes sense. The economy is slowing down. We feel the labor market slowing down. But what we are seeing is that inflation is starting to pick up. And the Fed, you look at the Fed's preferred measure of inflation called Core PCE. It's at 3.1%. The Fed has a 2% target. That's a 50% higher number relative to the Fed's target. So I don't think the Fed can cut rates right now. The other thing we expect to see is what comes out from the Fed's dot plot. So the dot plot, as you know, it's a report the Fed releases once a quarter. It's anonymously, where each Fed member anonymously indicates where they see interest rates, inflation, they see economic growth, all those things together. And we do expect, from an interest rate projection standpoint, the Fed keeps it as is. Just because there's concerns about the Iran war, the impact on inflation. But historically, I think the Fed is going to look beyond that. Because last year, for example, the precedent was set. Tariffs were announced, and the Fed's next dot plot, they did not raise it. So we think that the Fed looks beyond the near-term impact of oil prices and inflation. The other thing to look with the dot plot, I think the Fed revises upward a little bit the inflation story. Because if you look at the last dot plot, inflation was at 2.9, now it's at 3.1. They have to raise it a bit. And to your question, more particular, the Powell's press conference. This is likely his second to last meeting before he's done. I think he's going to be gone after that. I don't think he's going to stick around just because, it's a new regime. It's a new, Kevin Warsh is likely going to be nominated. I know there's some discussion in terms of will he be nominated, but he will make it through. He will make it through. And the question for Powell's press conference is the market going to view his comments as his comments or the comments of the entire Fed? And that's something we'll watch carefully. But overall, where do we see interest rates this year from the Fed standpoint? Well, the Fed, if you look at their last dot plot, it's very divided. Half of the Fed members said 0 or 1 rate cut in 2026. The other half said 2 or more in 2026. That's a really big division. And a lot of Fed speakers lately have talked about inflation, concerns. So right now, the Fed fund rate is pretty much neutral. So I think it's going to stay here for some time. The markets expect 1 or 2 rate cuts. But given the uncertainty about the war, about the effect on inflation, I'm not sure if the Fed can actually cut rates anytime soon. It may just be 0 or 1 cut for 2026.